Money Vikings, welcome back and thank you for joining me. And first of all, I want to say happy holidays to everyone. Whatever you practice or you celebrate, it is a time of true wealth. It's a time of being together. It's a time of, I think, practicing gratitude mainly. And so I want to say happy holidays from Money Vikings to all of you. And thank you very much for checking out our blog and watching our videos throughout the year. So with that, I wanted to do a bit of a 2023 recap, and then I want to talk about what we're looking at in the beginning of 2024. So with 2023, I want to talk a little bit about what we got right and what I think we got wrong. I think the first thing that we got right was our program of inflation defense systems, as we called it. IDSs, we like to create these sort of interesting terms and ways of framing things. We have our whole thing about the raging 20s. That's what we're calling this decade because of the volatility and the instability that we've seen. But what I want to talk about with inflation defense systems is, yes, it was a rough year with inflation, and understand that looks like we're turning the corner. We've said that before. But it does appear that we're turning the corner on inflation, and the market has really liked that recently. But I do believe at this time, I do think that a lot of it had to do with the disruptions that were happening during the closing and the opening of the economy. You'd have situations where over the last 3 years, you'd have the economy sort of closed in one aspect, and that would ramp up spending in one area, and then it would open, and then you'd have a ramp up in things like experiential travel, etc. And what I think that did is it kind of created this herky-jerky type of situation for the economy, because it does take many, many months for the industrial capacity and the retooling of the economy in order to ramp up to meet demand in different areas. So I think there was a sort of herky-jerky type of thing. But with that, it looks like things are pretty well smoothing out actually at this point, and that inflation, that core inflation, continues to drop. Now, it still is not time, I think, from a personal finance level to give up our defenses. I do believe that if you are someone that is building a life of true wealth and you are a long-term wealth builder, I think you want to continue to look for ways to reduce costs and buying in bulk. The Costco thing, finding ways to trim the budget and finding that extra savings, I think is all going to add up over time and make you much stronger, put you in a much stronger position. So I think we got that right. I think the inflation defense systems were quite helpful. What did we get wrong? Here's one we got wrong. Got wrong on, so REITs, real estate investment trusts, had a rough year. And I guess that probably could have been anticipated as interest rates go up. But again, I'm going to go long on REITs, and you never know what next year might come into play. It could be a good time to pick up REITs because you could see a nice upswing next year, especially if there's a softening a little bit and a reduction in the interest rates. So, one of our favorites, went down. And but I'm a long-term going to buy and hold, and then for me it's a buying opportunity. I see it as an opportunity to buy some more, and you're just getting a juicier dividend. So that was one area. Something we got right, 2023. I talked a lot about diversifying strategically. I think that was definitely the way to go in this market, and I think it was a great way to manage risk, yet also have some investment gains. So I think that was a really good move, and I think that's going to continue to be a good move into the future. And when I say diversify strategically, of course, I'm talking about a mixture of bonds and equities, but I'm also talking about favoring more ETFs, more funds, a mix of hard assets. Whether it be real estate, maybe a little bit of gold. I don't like gold that much, but just a little. But things like real estate mixed in there with the asset allocation. So I think that was definitely a good one. So as we go into 2024, what do we see happening? I'm going to do a couple posts on some particular picks that I'll be looking at. But to continue with that last theme, going to continue with the strategic diversification, number one. I think that's the way to go. Quality is another one. I'm going to continue to look at quality. versus speculative things. I will do, it is nice to do some maybe Bitcoin type stuff, speculative stuff, but not going to bet the farm on that because it just has shown in the past it can skyrocket up, but it can also drop like a rock. So gonna watch that as well. Third area, going to continue with the focus on health. Again, I think a balance of health and relationships, family, pursuits and hobbies. All that stuff combines into a life of true wealth. It's not just about an investment account or whatnot. I would also say, small, consistent actions are the way to go. That's what really compounds with time. Continuing that dollar cost averaging, continuing those automated investments. I really think that's the way to pull ahead over time. That is a very sound approach where you're mitigating risk. It's a very tried and true promised approach. So going to continue with that, but the main message here wanted to say thank you for a great 2023 and looking forward to more content creation in 2024 and sharing ideas with you all. So please like and subscribe, do all that, and see you in the new year. So everyone take care. Happy holidays.